This one is gonna change the way you trade. This one is gonna give you a tool that I've never given you before. This one is gonna put you in position to get your bag, make your profits, and take your trading to the next level. Roll that intro. What's going on, guys? Joe's here, and it's time to trade and get paid. I got a special one for you today. This one is going to be something I have not taught on YouTube before. It is going to be something that you may or may not have heard of, but I'm going to explain it in a way, and I'm going to show you how to use this in a way that nobody has ever shown you how to use it before. It's going to help you, it's going to make you profits, and I'm going to help you to take your trading to the next level. I'm talking about the inside bar candlestick pattern. So I know that sounds simple. For some of you advanced traders, you know, you say, that's a simple trade pattern. That's a simple candlestick pattern. You're right, but I'm gonna show you some really cool pro tips on how to use it that are gonna maximize your profits and make sure you win trade. But before we jump into it, I wanna just invite you, make sure you check out tradinggetpaid.com. My students are winning. Go on my Instagram, go on my TikTok, go on my Facebook. You'll see in my stories, you'll see where all of my students, like, it's incredible. They are winning, posting profits, passing trading challenges, and getting their bag. You can too. Tradinggetpaid.com, become a student. Don't miss out anymore. Smash that like button if this video brings you value. Comment below, let me answer your questions, and subscribe so you can get notified every time that content comes out. I'm bringing content that's taking your trading to the next level. Education over entertainment. I'm not here to entertain you. I'm here to make you into a pro trader. Let's look at these charts. So when we're talking about candlesticks, you're gonna notice something here before we get into the actual inside bars and all that stuff. I want you to see something here. Notice how, like, this candle, let's say for example, has a high, it has a low, right? We know basic candlestick anatomy. You can see videos in the past about how to break down a candle. Candlestick anatomy, you have a high, you have a low, and then the next candle typically takes price in a direction. So for an example, let me make it real big for you so you can see it. If you look here, you'll see this little black doji. There's your high, there's your low, and you'll see that the next candle breaks both the high with a wick and breaks the low with a body and wick. Then you see the next one, which is the one we're gonna talk about in today's video, is a little different. Watch this. You'll notice here that the high of the yellow candle and the low of the yellow candle are here, but the next candle does not penetrate the low, and it does not penetrate the high. This is called an inside bar. This means that the bar that you're looking at, or the candle you're looking at, does not pierce the high or the low, not even with a wick. It does not pierce the high or the low of the previous time period. So when you're looking at that on a 30-minute, 1 hour, 4 hour, and it works on every single time frame, doesn't matter, what it's doing is it's telling you that the previous time period is still in engagement. It's saying that right now price is coming back and contracting, pulling back, contracting. You're getting like a retracement, but not only just a retracement, but a like a range of consolidation before the next move. Now let me show you what to do with an inside bar. And before I do that, let me show you a couple of examples of what are not inside bars. So you look in the past here. Let me get rid of these lines. When you look in the past here, you have a high, or a low, and a high. The next candle breaks higher. A high and a low. The next candle breaks higher. Even this one, a high and a low. But even though that tiny, tiny little body right there, and it doesn't pierce the high, but it does pierce the low. So on and so forth. Go back. High, low, creates a lower. High, low, creates a lower. High, low, creates a lower. And you'll see this over and over and over again. Many times, even when the body of a candle is smaller than the previous candle, the wick still pokes out and kind of gets that, that cycle, right? What happens is it goes back and fills any gaps or fills any orders from the previous time period, and then it continues in a direction. So what I'm telling you here today is when you see an inside bar, now let me be careful here. No candlestick in and of itself, just like an indicator or anything else, is standalone. No strategy is standalone. You can't just take this line crosses this line, this dot flips, or this candle forms, boom, get in, that's it. Just arbitrarily just get in. That's not how the market works. There are some steps that you have to take. So first thing you want to look at is price action. So you'll see price action. Which direction am I going in? Is price strong? Is it strong bullish? Is it ranging? Is it consolidating? What is price doing? Is it above average? Is it below average? What is price doing? The next thing you want to look at is market structure. Is price approaching structure? So if I'm bullish, that sounds great. I'm looking for a buy. However, if I'm approaching resistance, why would I want to take a buy, right? I don't want to trade into resistance. But if I'm bullish and I'm approaching support, in other words, I'm pulling back, now I'm looking for an opportunity for the next move up. I want to trade away from support, not into resistance. Then you want to look and see if you have patterns, chart patterns. And then you want to come to what we call candlestick patterns. If you want to see videos on the full order of operations, go to tradinggetpaid.com, where I teach you a full course on how to break down every single trade and have perfect trade setups for every time you mark up your charts. So back to the strategy. So here's what we have. Here's what I want to show you here. Okay, let's look at these kind of these diagram candles here. And what we're going to do is we're going to show you what happens with an inside bar. So right here, you see that we have strong bearish move, right? This is the high of the candle, the low of the candle. Now, anybody that's been in class for any amount of time knows this is right here. This is where a bullish candle or a bearish candle opens. This is where a bullish candle closes. This is the highest price of the time period. And this is the lowest price of the time period. Well, when price closes, a new candle opens at the same place. Sometimes there are gaps, but the majority of the time, price opens where the previous candle closed. So price opens here, it pulls down at its lowest point, pulls up to its highest point, and then closes as a bullish candle. Now, what you'll notice here in this candle arrangement is that from the high of what we call the mother candle, okay? So when you're looking at an inside bar, you have the first candle, what we call the mother candle, and then we have the inside bar, okay? So the first thing we're gonna look at here is we're gonna take the mother candle and we're gonna put a line on the top and the bottom. Now, you don't have to actually put the lines on the chart when you're marking it up. I'm just showing it to you for educational purposes, and then we'll go to actual candles here in a minute and what to do. So you have your high, you have your low of your mother bar, and then you have your inside bar. Now you'll notice that it never pierced the bottom and it never pierced the top. So you'll say, well, that's bullish, so shouldn't we buy? No, not necessarily. Because what's happening here is that even though this candle was bullish, it doesn't affect the high or the low of the previous time period. So really, what is happening is the high and the low of the previous candle are still in effect because they have not yet been broken. So what we do when we see this is we realize that this was our momentum candle and the inside bar was our pullback, getting us ready for our next push in the direction of the trend. When we trade an inside bar, yes, you can trade counter trend, and and you've heard me say that before, but that's not what I'm going to teach you in this video. In this video and for this strategy, I want you to trade with the trend. So you're going to see momentum candle or mother candle. You're going to see inside bar pull back. This is a bearish move. And what you're going to do is you're going to trade the next bearish momentum. So in this case, you would take a sell, even though you see that your candle is blue. In this particular case over here, we have a blue mother bar or mother candle. So you have your top, your high, you have your low of your mother bar, your mother candle. Then you see price closes, same way, it opened here, went low, went high, and closed here. As soon as it closed, a new candle opened, went up, did not break the high, went down, did not break the low, and then closed right here as a bearish red candle. Now, you would say it's red, it's bearish. Shouldn't we sell? No, the momentum is bullish. So we have a bullish candle right here, a bullish candle right here. That the time period, high and low, have still are in effect because they have not been broken. We get the pullback, the consolidation here, and now we are waiting for momentum to carry us back in the direction of the mother bar, okay? Or in the direction of the trend, the current trend. In this case, bullish. So how do we actually trade these? How does the actual strategy work? Do you just get in when the mother bar or when the inside bar closes? No, that's not for this strategy. That's not what we're gonna do. For this strategy, what we're gonna do is I'm gonna show you how to trade momentum. We wanna trade with volume in our direction, okay? So what we're gonna do is we are going to, you see how it's right here? You can do one of two things. You can go like this to the bottom and like this to the top. But why would I do that? Look at that risk reward. Do you see that? That risk reward doesn't make sense. So if we know it's gonna push down and come back to the low again, yeah, that sounds great, but I wouldn't wanna risk that much to get that little, right? So here's a better way to do it. We're gonna take our entry, we're gonna wait for price to come back and break our mother bar again. In fact, let me get rid of these two lines. We're gonna wait for price to come back and we're gonna enter, we're gonna put a sell stop, in this case, a sell stop at the price of our mother bar low wick. At the low wick of our mother bar, I'll drop a line there for you just so you can see it. At the low wick of our mother bar, we're gonna drop, so that's 191388. We're gonna put our sell stop. We're gonna put our stop loss at the top of our mother bar, and then we're gonna look left to structure, and we're gonna put our take profit at the structure, wherever that is. And in this case, what would happen is you would take that, price would come dropping down, and when it passed that area, it would enter a sell. And then it would come down and find that momentum, and your stop loss would be here. Once price starts pushing really good into momentum, you're gonna wanna move your stop loss into profit to make sure you maintain your risk to reward ratio. And then as you see the price start to gas out, and you start to see the price losing momentum, that's when you wanna just close the trade overall. So that's how you would trade a bearish inside bar. Now, for the inside bar to the upside, what we're gonna do is we're gonna do the exact opposite. In this case, we have a bullish mother bar and a red or bearish inside bar. So we're gonna see this here. This is a bullish pattern. We're gonna wait for price to break past here. So what are we gonna do? We're going to enter a buy stop at the price of our mother bar's highest wick. We're gonna put our stop loss at the back end of our mother bar at the bottom. And then what we're gonna do is we're gonna take price, we're gonna look left where structure is, and we're gonna put our take profit over here. We typically want at least 1 to 1.5 or better. I like 1 to 2. I'll leave that up to you, but don't take something that doesn't have good risk reward. If the risk to reward ratio is out of whack or out of sync or not in your favor, it's probably not a good trade to begin with, and you're probably at a structure that you're just not seeing. So what you wanna do is wanna make sure that the risk reward is at least 1 to 1.5, and at least, really I like 1 to 2 better. I'll leave that to you. So price would come back, so your new candle would open here, price would come pushing past here. Once it crossed and broke that mother bar, it's gonna enter and price is gonna start moving up. When it does, you're going to take your stop loss, move it into profit, and again, when price starts to gas out, you are gonna go ahead and close your trade. That is how we would trade an inside bar. So let's go ahead and take a look, and we're gonna see a really great example of a trade I called out to the team just the other day or yesterday. And what we're gonna do here is we're gonna see this. Now, we have a bullish trend. We're in a bullish trend, but the most recent force has been bearish, right? So we have high, low, lower high, lower low, lower high, lower low, and then we have a higher high. However, it's still not higher than our previous structure. So when we look at it from this perspective, and this is a little free lesson on wave theory, but you have waves, right? Inside of waves. So you see that you have waves there. Now I want you to see this. Low or high, low, lower high, lower low. That's the trend, okay? So even though, yes, we do have some bullish momentum previous, the most recent trend is high, low, lower high, lower low, lower high, lower low. We're in a downtrend, okay? So because we're in a downtrend, we are looking for a sell position in this strategy. So that's key. You want to make sure you're trading in the direction of the most recent trend when you are trading an inside bar. So here's what happens. Price comes moving, all right? And here we go. We get a push to the upside, and this is a great time to start looking, because what's happening here is a cycle. And I have a whole nother video series on currency cycling. I would encourage you to watch that to understand currency strength analysis and how price cycles throughout the market. So we have our structure to the downside, low, upside, high, and then we get a momentum bar. Now, I'm gonna make this a little bit bigger so you can see it real good. Now that we know we're in a downtrend, we have a momentum bar here. Now this right here shows you that even though we had a strong push to the upside, we got an engulfing candle coming to the downside, showing that volume is now picking up. We always want to trade with volume. We always want to trade when there is volume in the market. So this is a US session trade. We get a US session a push to the downside. And so this is US session volume for GBP JPY. So US session is pushing and JPY is starting to make a nice move. So we get an engulfing candle to the downside, and then we get this inside bar. So let's take a look at what happens here. Watch this. Let's make it a little bit bigger so you can see it. And here we go. So we got the low side of our mother bar right here. We get the high side of our mother bar right here, and then we get the next candle. Now, I'm gonna put this in replay mode just for a second, just so you can see what happens when it actually takes place. So you see here, we got this mother bar, we got the inside bar. The bar is not piercing the upside, it is not piercing the downside. We have a clean inside bar. At that moment, what we're gonna do is we're gonna go ahead and put in a sell stop. We see that happening, bearish momentum, bearish trend. We're gonna put in a sell stop. We're gonna put our stop loss up there at the top. We're gonna put our take profit. We're gonna look left and we're gonna find structure. And so you can see right here, you can look, you got a really nice structure right there. And so we are looking pretty good. We're better than 1 to 2. We're very, very happy. And now we enter the trade. We let the market do what it wants to do. So what happens next? We get our momentum bar that breaks that previous mother bar's high. You'll notice that we're also at a point of structure with your 50 moving average. And so we got momentum, inside bar, sell stop, and now we get a push. So now price is engaged and we are moving. And here we go. Here's beautiful volume, beautiful volume. Price is coming all the way down here. At that point, you probably want to at least make your stop loss go to break even. I'll let you decide how you want to treat that, but it really isn't going to matter either way, because once we get this, now watch this, I want to show you this. Once we see this happen, right? Price is pushing to the downside, and let me tell you something. Let me tell you why most traders mess up. We are so greedy. We want every single pip that the market has to offer. I'm telling you, when you get that close to your take profit, you better go ahead and take your bag. Watch this. Look at this. You are within pips. You are within pips of your take profit. You are at an extension point. At that point, you should be, at very minimum, you should be taking partials out of the trade. If you're at a $10 lot size, at that point right here, you should be bringing that thing down at the extension point like that. You should be bringing that thing down 80%. So if you were at $10, you should be at $2 now. You should go ahead and secure your bag. You just put all of that money in the bank right there. If you did that at a $10 lot size, look at this, and you secured it right there, that's 49 pips. 49 times 8, do the math, right? You just put some bread, you just put some money in the bank. Okay, now go ahead and at least secure partials, but for me, I closed my trade when this happened. Why? I'm past the most immediate structure, I'm extending hard, and I know that at some point this is gonna have to come pushing back to retest. So for me, I like to get out. Another way you can do that is drop down one time frame and look and then, you know, now you're looking at the 15. At very minimum, get out there. You see black candle, get out, right? At that point, you know volume's over, get out of the trade. You lost some of it, but you didn't lose all of it. So that's how I would do it. I would get out when we have volume, but you see here, and let me just get out of replay mode now at this point. Price comes pulling back. Even if you did leave your stop at break even, you came and got your pullback, and then it ended up pushing down even more. So you were happy either way. You can kind of use your moving average as a guide. Use a moving average if you want to use that as a guide to where you want to put your stop loss. But structure is always the best guide. So that's how you would trade the inside bar. Literally, set your sell stop or buy stop, depending on what it is. Set your stop at the trading end of your mother bar and let momentum carry you. Rather than chasing the trade, let the trade come to you. All right, guys, there you have it. I hope this video brought you a lot of value. I hope you understand the power of the inside bar. If this video did bring you value and you learned something that you didn't know before, hit that like button. Comment below, let me know what your favorite part of the video was, and if you have any questions, and I'll help you answer them. Subscribe, hit the bell, make sure you get notified when I drop content, because I got content coming for you that is going to help you win. You want to become a student? Go to tradeandgetpaid.com, become a student today, and win with the rest of our team. Get your bag and become a pro trader. I'll see you in the next video.